Hi guys, this is Ravi here from Life's Basics. Just putting together a quick video on some warning signs that I'm seeing in the US stock market today. If you're heavily invested in the US stock market or you're thinking of starting to, I just wanted to put out this cautionary video, and what I'm going to do is share a few quick slides with you here, just basically outlining why I'm feeling very cautious on investing in the US markets right now. The first chart that you're seeing here is of the S&P 500, which is the traditional sort of benchmark or barometer of US stocks. Going from left to right on this chart, you'll see three distinct peaks. The first was in late 99, early 2000 during the tech boom or bubble. And the second circle that I've applied here is in 2007 into 2008. And obviously we all know the financial crisis happened beginning in 2008. And we didn't see a bottom until 2009. And many stocks were off, around 50% from peak to trough. And here we are today in March 2017 as I make this video, and look at this chart. The far right circle highlights where we are as of March the 9th, and we're at around the 2400 level. Now, I don't know about you, but when I look at this chart, I see danger. We've seen an upward move in US stocks without really any meaningful correction since 2009. So we're basically 8 years, almost exactly 8 years into a bull market in US stocks. Now, another measure that I like to look at is the Case-Shiller price to earnings ratio, or the Shiller PE. Currently, as of the time of this video, the PE ratio is at 29.6 as shown on this slide. This is 77% higher than the historical average of 16.7. And the historical low we see on this chart is at 4.8, and the high was achieved during the craziness of the tech bubble again in 99-2000 when it reached 44. There are only 2 times in history that this price to earnings ratio was ever higher. That was back in 2007-8 and also in 1929, and we all know how those subsequent years went for the stock market. Now, just to highlight or zoom in more on that Shiller price to earnings ratio, here it is again at 29.5 versus the average over time, which is historically at around just under 17. So again, in relation to 1999-2000, the tech boom, and the 1929 high, the Case-Shiller PE ratio has not been this high other than those 2 time periods. So, it's something to think about. The next chart here that I'm going to share is the S&P 500 price to sales ratio, which on this chart it goes back to the early 2000s. And again, the current ratio is at about 2.08. The average over this time period is typically 1.44. So again, here's another metric that shows that stocks are pretty expensive according to the S&P 500. John Hussman's a guy that I follow very closely, and recently he put out a chart here with the median price to revenue ratio of S&P 500 index components. Now look at this chart that dates back to 1986. Now, I don't know about you, but this looks rather extreme to me, and it's just flashing warning signs or danger when I see the chart like this. The last time we saw an extreme level again goes back to 2007, and look at what happened to the markets after it kind of hit 1.8 there. And so today we're really elevated here at about 2.4 in terms of a median price to revenue ratio. Okay. Here's another one. It's market cap to GNP, or gross national product. Now, Warren Buffett, in an interview a long time ago with Fortune magazine, stated that this is one metric that he uses or looks at very carefully to see whether stocks are overvalued or not. The current market cap to GNP, or gross national product, hasn't been this high really for a long, long time. The only other period that it's been this high or higher was back again in the madness of 1999, 2000. So look at where we are on the far right of this chart is roughly where we are today, elevated over 1.3. Okay, so, I've just shared a few charts here with you, and I'm advising anyone who is heavily invested in the US stock market or is considering diving in, be careful out there. Be very cautious. Look at all these metrics, and they're all screaming, at least in my eyes, warning flags or to proceed with caution, or maybe even take a pause here, take a wait and see approach and see if things are going to correct finally after so many years of being in a bull market. I'd hate to see, people's hard-earned savings or retirement funds, especially the elder people who are nearing retirement, or maybe you're in retirement and you want to protect your nest egg. You need to pay attention to these things and not get caught in another bust that followed previous booms, right? In 1999, it was a severe correction following that boom that lasted a few years. And then obviously the financial crisis reminded a lot of people of the risks inherent in capital markets. So I'm not saying to sell everything. Everyone has their own individual financial circumstances. You probably have a financial advisor you need to deal with. My only point in this video is just to highlight some of the risks that are out there for your money. So be careful out there.